Righty, good morning, good afternoon, good evening, traders, and welcome to the Pip Grabber Trading Show. If my voice is a little bit croaky, I do apologize for that, but I am struggling with the throat again. But want to go ahead and welcome everyone to the show. This is, of course, a weekly show that we do 3 times a week, and we do it on a Tuesday, Wednesday, and Thursday. And what we do is we use a unique trading strategy. We look for support and resistance, and we buy off those levels. Now, we use a cost averaging trading approach, which is very important for traders to understand that because it comes down to properly managing your risk. When you enter multiple times in the market, you have to understand your risk, and you have to understand that you have to go ahead and use low risk at the start. We're going to get into some of those details right after this. In fact, there is no right after this because there's no break. All right, so we're going to do a commercial. Boom, there's a commercial. We're going back. Sorry, my apologies. We just haven't got our commercial break set up right now, but we're going to go ahead and get started with the show today. Welcome everyone to the Pip Grabber Trading Show, and we're going to go ahead and take a look and see what's going on in the market this morning as we dig into some details, some trading opportunities. Now we are going to take a look and see what we are in right now. Here is the trades. You can see that we are still in on the euro US dollar. Now we had some big downward slide on the euro and the pound over the last week due to, of course, the war on Ukraine. And we've seen a bit of recovery coming back now this Sunday. So we are seeing some recovery. But I sent out a message on Telegram, and I sent it out last week, late last week, and I said to traders to make absolutely certain that they managing their risk properly. In fact, I said there was 4 ways that you can go ahead and manage your risk, or at least lower your risk. Because I've always said to traders that I'm going to lower my risk. I'm going to still trade through the war, but I am going to lower my risk. Now, how do you lower your risk? Well, there's 4 ways to lower your risk. First, obviously, is to go ahead and cut your lot sizes. That's number 1. All right. In order to lower your risk, cut your lot sizes. So if you're trading with, let's say, 50 micro lots, go to 25 or 20 or 15, whatever you choose, but lower your lot sizes. The second way to lower your risk is to go ahead and minimize the currency pairs that you're following. If you're trading, let's say, 10 currency pairs, go ahead and reduce it down to 5, maybe 3. If you're trading 5, maybe you want to reduce it down to 2 or 1. So lowering your risk can also mean cutting the currency pairs that you go ahead and focusing on as well. The third way to go ahead and lower your risk is to go ahead and simply take your trading account, and let's say you're in multiple positions already, and you start off with a $10,000 trading account. To lower your risk, all you have to do is fund more capital in your trading account. So by taking a $10,000 trading account and putting in, let's say, 20 or 30,000 into that, will lower the risk because now you have more margin to be able to trade with a bigger size trading account. Now, I've always said this in the beginning. I'm going to go ahead and say this again. In most cases, when I go ahead and manage my risk, I'm normally trading with only 40% of my capital. And 40% of my capital means that my risk is already lowered if you talk about the overall portfolio. So all I have to do is to go ahead and add in the rest of the funds into my portfolio, and now my risk is now lowered. So that's one to do. So which means that you have to have backup capital. Now, some of you might say, well, Big Dog, I don't have backup capital. I don't have the opportunity to be able to do that. So then you'd look at the other options to lower your risk. Now, that's 3 I've mentioned right here. And the fourth way to lower your risk is start cutting your losses. So cutting your losses and reducing your risk by taking out the currency pairs that have got low risk, all right, or at least low drawdowns. Cut those positions and give yourself more capital, all right, more margin to be able to trade the ones that you are trading. Now, however you want to go ahead and manage your risk is up to you. But remember, traders, you have to start making decisions before you start trading. Start figuring out. A lot of traders are trying to figure out their risk management options when they're in a deep drawdown, when they're in a position where they're like, oh my gosh, what do I do now? You've got to think this through before you go ahead and start trading. So remember this, all right? trading can be very profitable, but the one thing that's going to keep you surviving through some drawdowns, through some bad trades, is, of course, making sure you've got a game plan when it comes to how you're going to manage your risk, all right, if things don't go the way you're hoping for it to do, all right? So just remember, those are the 4 ways to be able to reduce risk. So when I say reduce risk, it could be any one of those 4, depending, of course, the situation, will be dependent, of course, how I will manage my risk. Now, let's go ahead and take a look and see what we've got right here. Let's go back to the charts right here, and you'll see that we have the euro US dollar right now. We've got multiple positions in right now. I'm about 28 pips away from break even on the euro US dollar, which is not too far. But at the same time, I'm going to go ahead and probably get out a profit on this, because it'll be about 5 pips above my break even point where I'll be looking to take profit. Now, I want to go ahead and mention this, and this is also very, very important. When you look at the way I entered the market, notice that I've been consistent on my entry points, all right? Very important, traders. That's why you need to have buying power when trading. Because if you don't have the buying power, you don't have that additional capital, all right, then you have to reduce. Now, let me start with, let me take a step back right here, okay? Because I think this is important. When you're looking at risk cap, when you're looking at managing your risk, this is why it's important to understand what you need to do before the time. Because when you're going in and saying, well, big dog, I don't have additional capital to go ahead and manage my risk by adding more capital to it, this is all I've got, then you've got to go ahead and make a decision and say, I'm not going to trade with the full capital that I have, but go ahead and reduce the risk down to, let's say, 40% of your capital, trade with that, and leave the other 60% as your backup capital. This has got to be a decision before the time. If you didn't make that decision before the time, then shame on you, because these are things that you have to do. All right? Now, I'm not trying to pull anyone down or push, point fingers at anyone. I'm just saying I've had too many emails coming through that people, and this has been not now, I'm talking about throughout the years that I've been trading and I've been working with students. I've had so many times the students go ahead and send me email, big dog, I'm in a position, I'm running out of margin, blah, blah, blah. I'm like, listen, this is not the time that you should start thinking about that, all right? Think about it before the time comes. If you don't have additional capital, use 40% of the capital and trade with 40% of the capital. The reason why I'm telling you these things, because I've been in that situation. I've had those experiences. And trust me, it's not a good position to be backed up in a corner where you don't have the margin, you don't have additional capital, and you've got to start cutting losses on your position, okay? It's not a good position to be in. Now, let's go back to the euro US dollar. The reason why I'm at this point right here where I'm about 27 pips away from my break-even point is because I was consistent with my strategy. I had the buying power to continue to follow through the strategy, keeping the market close to me and not allowing the market to chase away from me. You see, if I had stopped trading on the euro US dollar and I stopped at, let's say, 5 positions in, and I decided that that's it, I'm not going to do anything more, what's going to happen is the market's going to it's going to run away from me. And when the market runs away from you, you're then fighting a bigger battle, because now you're going to make up so much more ground to get back to where the market's at instead of keeping the market close to you. And when I say that is by using a cost averaging trading approach with good, sound equity management all the time, you're allowing the market to stay close to you so that if we do have this correction move, you can get out and take your profits. Now, listen here, I'm not going to claim that I'm all innocent, right? Because I have had positions, specifically on the Euro Swiss. I'm not going to talk about that now, but in my hybrid trading room, I will go ahead and cover that. But in the Euro Swiss, I got to a position where I could have taken about 5 or 6 grand out of that position, and that ended up turning into a 30,000 drawdown. And that's not what you want to do. So I've made mistakes of my own that I'm living with, that I have to work my way out. But I do have the buying power to stay in the market and wait it out. But that's not what you want to do. Do not be greedy when it comes to taking your profits. Make sure you go ahead and set your targets. And believe it or not, I came about 25 pips away from my target on the Euro Swiss. I saw the market was stalling, and I chose not, and this was just before the war started, chose not to take my profit. And the war got me, what happened in Ukraine has got me into a position where I've got my drawdowns, and now I'm fighting my way back again. So guess what? I'll probably go ahead and get out of that position at almost break even, not take the $5,000 or $6,000 profits, and end up being in a situation where I was in a drawdown because I was greedy and not disciplined enough to take my profits. So everyone's learning, and I learn every day. I still make those mistakes, not as many as mistakes that I did 10 years ago or 20 years ago or even 30 years ago, but I do still make those errors. And sometimes it comes that you believe the market's going to give you a little extra, and so you hang on a little longer. Sometimes it's time to call it a day and cash out. All right, traders, well, let's go ahead and take a look at what's going on right here in the market. All right, so that was a little bit of, I'm going to call it Preachy Friday. All right, it's Tuesday today, but it was Preachy Friday. I think it was important for everyone to know this because of the message I sent out on last week. Send out that message. I want to be clear as exactly what that really means. All right, so everyone understands that. Now, let's go ahead and take a look and see what's going on with the market this morning. As we dig into some trading opportunities, let's jump in. Now, remember, we've got the euro that we're currently in positions right now, but we have a lot of other opportunities, right? So let's go ahead and jump in, and let's take a look at what other opportunities do we have this morning that we can go ahead and take a look at, because we've got the euro, but we've got another few pairs right here that we can go ahead and look at. Let's jump into the Aussie, excuse me, the Aussie Canadian dollar. Let's go into that first, because we've been making some profits and some sells on that. But we know that the Aussie and the New Zealand dollar have both been rallying pretty strongly. Okay? Pretty strongly. In fact, if you go over here, this is the daily time frame. Take a look at that big, strong rally up here to the top. Now, if you remember, we did call this out. We did say that the market has gone ahead and created this wave 1, 2, 3 down here, 4 was up here, and price dropped back down to the 1.27 and turned around. And we said, traders, that we're heading off towards the 4th wave target, which is up here. So there was this expectation of the Aussie CAD moving north. Now the question is the Aussie CAD now heading back down south? Well, let's take a bigger look at this. All right, so actually, in fact, let me do this. Let me go to the weekly. And to me, it's always important to look at the larger picture to establish what the larger picture is doing, so I can understand whether or not I'm in the wrong direction here. All right, so here we go. So we've got an overbought condition on the weekly here. We did see the market take out the wave 4 right here. And because the market took out the wave 4, what I should be doing is looking for a large wave going down. So let's do this. Let's go ahead and do some housekeeping here. And let's go ahead and clean up this chart right here, because we already established what the market's doing right here. So let's go ahead and do some good, solid housekeeping here. In fact, let me do this. Let me just go ahead and do this. There we go. Perfect. Now, I don't have to go ahead and put any swings in here based on the inside swings. All I got to do is just go ahead and mark off my big wave 1 right here. There it is. And now I'm going to be dealing with this. This is my big, large swing. I'm going to go to the daily time frame right here. And I've got the swing in here. There it is. All right. Now, looking at the daily, we understand that the market's in a correction. All right. We've got a correction move. Price is in a retracement. We've got an overbought condition here on the oscillator. So which means that there should be a sign, or at least something right here, that we're going to be looking for to go ahead and sell. Now, could price go further north? That's always the question right here. Can price continue to rally? Absolutely. All right, and I'm taking the war, I'm taking news, I'm taking all of the stuff out of the equation. I'm really just focused on the technicals. And so right here, the question is, can the market go back, can continue to move north? Yes, it can. All right, absolutely can. All right, now, I'm going to bank on whatever, bank on the things that I always see all the time. Doesn't matter if it's during war, during major news announcements, like, and I won't even say rate decision, because that's not even a big news announcement anymore. But I'll say like Brexit type news, right? When we have those type of news reports right here, do we see any time the market rallies or dips in a direction? Do we see correction? And the answer to that is yes, we do. We absolutely see correction. So this is the same thing right here. So this is the big war rally that we've had. Commodity pairs have been just strong. We've seen gold on the upside. We've seen oil pushing higher. Everything's just going out of proportion right here. So let's just take a look right here. So if I look at this, I'm going to focus in more now on this rally here. So I'm going to go to the 4 hour. And let's see if I can get some nice swings going up right here. So right off the bat, I can see here that I do have a wave 1, 2, 3, 4, and 5. So here is a wave 1. So which means that this is a wave 2 right here. And price didn't take out that wave 4, which is interesting because it was strong. And it's just continued to rally. So it looks like we've got a wave 3 here. Now we're going to look and see, do we have support here? All right, well, let's take a look and see. Let's break this thing down. There it is. So I'm going to put in the big wave 1 right here. Boom. There it is. Here we see wave 2. But notice something right here. This is important. You see, the reason why I look at these things right here is because it tells us a story. All right. And as the market trades through this wave, at least trades through the 1.618, we have a pullback. So let me see if I can get out that triangle. There we go. So here's the pullback. And it's come back all the way back to the 1.618. So we're getting a support coming off over here. So there could be a little bounce. Now remember, this is a 4 hour time frame. So there could be a bounce off the support, and we could actually go ahead and trade higher. So the Aussie CAD could go higher if it stays above that level. So this is critical right here. Now, if you look at the oscillator has not moved into the sell zone. All right, the sell zone would really be around about this 50% level right here. And so we've got into an overbought condition, but it hasn't broken south yet to confirm that the trend is down yet. So there's a good chance that maybe we're going to bounce off this. Maybe price is going to go up and chase after this. Maybe we're going to have a false breakout right here in the irregular flat, and then price is going to come back down deeper. But there is something that we need to pay attention to right here. So Aussie CAD does look a little interesting here, and that there is this chance of correction, but we've got to break through the support level. This support right here at around about 93.30 is key. All right. Now, I know that we've got in our trade copy, I know that we're holding quite a few positions on the Aussie CAD right here. So we're going to keep an eye on this, because if we do break below this, then we could be heading back down south, which is going to be great for us. But a bounce of this is not going to be that great. So what we're going to do here is we're going to take a look at the lower time frame. I'm going to go down to the 15 here. So here's the 15 right here. The reason why I'm going to the 15 is because I want to take a look at these swings. Now, right here, I'm going to mark it off. Yeah, you can see wave 1, 2, 3, 4 right here comes back, test wave 1. And then this looks like a wave 5, which means, traders, that we could be heading back up north right here. Look at the oscillator. Oscillator did come below here, and now it's gone ahead and traded over here after the overbought condition. Now we're at an oversold condition here. So there is definitely support here to bounce it back up again. So because of that, I'm going to go ahead and take a look here. And I'm going to put in this fifth wave here. And I notice that we haven't quite got to that fifth wave yet. All right, so we haven't got there. So definitely that's holding support there. So when I do this, if the market stays above this level, it's going to go bullish and get us into a deeper correction here. That could be about 57 pips. Okay, so I think on the Aussie CAD, there's a good chance that we're going to see a little 20 pip rally. Now we've moved up, let's see here, off that support, how many? The market's already moved 14 pips. All right, so because we've moved 14 pips already here, we still got 56 right here. Is that a long candle? It is. We had a long wick over here. Did we have to, let me take a look at the news. News out today. We got the looks like at 5:15. We got the RBA Governor Lowe that speaks over here. And oops, let me just go ahead and take a look over here. He is speaking on. He speaks on the Australian Financial Review Business Summit. That's what it is. It's in Sydney. Okay. Anything else come? Let's see whether anything else come up in the news. I hope this is going to be true. I hope Biden is going to set a ban on U.S. imports to of Russia oil. I hope that is going to be the case. It looks like that's good news if it is. Right here. You know what I'm going to do? I'm going to put a penny in the Aussie CAD for right now. I'm just going to put a penny in the Aussie CAD. Let me see here. All right, I'm going to put an Aussie CAD penny in right now. Let's go to the New Zealand CAD. Yeah, I don't know what break-even point is on that, John. We'll have to take a look at that. All right, good morning, Susan. Let's see here. All right, let's move on to the daily first. All right, so if I look at the data right here, I still believe that the New Zealand CAD. Oh, by the way, let me go to the Aussie CAD and take a look at the bigger picture here too. Yeah, there's definitely. I mean, we got to go ahead and put this in right here. There's definitely level of support right here and level of resistance right here. So we got resistance up here, and we can see that we had support down here. And the market did come back in, so which means we got support right here. So there is this feel in the sense that this swing that we had right here was just really a correction move, and the price is really going to go back up north again, especially after we bounced off this support right here, went, or at least went below it, went up, then bounced off the support right here, and now looking for price to go back up again. So traders, I'm going to actually rule out this downward swing, and I'm going to actually anticipate price in the long term to go and continue to move bullish. But I'm going to say this. That we might be due for a deeper correction first before that happens. Now, we'll see if this 1.618 right here holds. Did we just have another bounce of this? Let's take a look here. All right, I'm going to keep a close eye on this. All right, let's go back to the New Zealand dollar right here. So going back to the New Zealand dollar right here, New Zealand CAD, here we go. We've got resistance at the top. We've got support down below right here. We look for price to continue to move back up north here. I do like to be bullish on this, but I know that there is possible correction due. And if I look over here, look at the wave structure we had right here. It's starting to break its structure. Here we had a wave 1, 2, 3. We saw a little bit of selling over here, okay? But it broke through there, so which means that this is all off. This is off the table right here, and the fourth wave is becoming less and less prominent, and there's a higher chance that price is going to continue to rally, but we're going to get a little dip here. If you look at the oscillator, we're starting to see a bit of divergence here, negative divergence. So this looks good for a sell on the daily. Look at the 4 hour. It looks like the 4 hour is also good for a sell. And even the 1 hour is good for a sell. Again, it'll be a short-term sell on this. All right, so I'm going to go ahead and I'm going to do this. I'm going to hedge the position on the Aussie and the New Zealand dollar. I'm going to buy the one and sell the other, and I'm going to go ahead and hedge it. I'm going to go do this. Take a look at the Aussie again and see if it hasn't gone up too far. No, it has not. So I'm going to hedge the position here. And I'm going to buy Aussie and I'm going to sell New Zealand CAD. So let's go ahead and sell New Zealand CAD right here. And I'm going to go ahead and buy the Aussie. So I'm looking for 20 pips out of the Aussie, and I'm going to be looking for about 20 pips out of the New Zealand. But again, looking for two separate setups. I just know I got a 15 there. All right, so let's do this. So we're buying Aussie Canadian, and we're selling a New Zealand CAD. And that's because they're both set up differently. Aussie CAD's at the support right here. Makes sense why we would buy. The New Zealand CAD is at this resistance here where we had a downward swing and we're looking for price to move down further. So this is just a correction and we're looking for price to move down. We've seen a lot of negative divergence on the New Zealand CAD indicating we're going to see a correction move. Let's see how that plays out. Let's go to the US dollar CAD right here. So US dollar CAD, and you know what I want to do here? I want to go ahead and take a look at US oil. Let's jump into US oil, and I want to go ahead and take a look at dollar index. So let's go to US oil here first. And traders, we had that resistance. Let's go to the daily. We spoke about this last week. We said there's a bunch of resistance right here that could help us drive market back down south from a technical perspective. Clearly, that wasn't enough based on the Ukraine war. And so we thought in the State of the Union speech with Joe Biden that we'll get some sort of confirmation that we need. And the confirmation that we're really looking for was that they were going to open up the Keystone Pipeline, start producing oil here in the U.S., become U.S. Or at least oil dependent instead of becoming independent in oil. And the thing here is, if we're not going to get that, if we're not going to get our own independence, and we're going to rely on Russia, Iran, or even Venezuela, it is a problem. That's a problem. And so we're certainly not going to help with reducing price on, at least we're not going to reduce price. Sorry, let me just go ahead and, my producer's not paying attention and my camera's gone down. There we go. All right, there we go. So we got this right here where we are going to consider price of oil to drop. Now, again, we went in and put this up right here, right? We said that there's a lot of resistance over here. We're now at the 1.618 right here. We've extended south. So the market, oil price is overbought, extremely overbought. We just got a little bit of news out here, okay, stating that Biden set to ban U.S. imports of Russia oil as soon as today. That's good news. But the only thing that we want to see him back it up with is what's he going to do about producing oil here in the U.S.? Is he going to lift the ban here in the U.S.? Are we going to start producing oil here in the U.S. that's going to make us oil dependent? And so if we're going to go ahead and take a look and see what he does today, we'll see what the reaction is of the market going to be. The market will only be, and again, that's the only way to get those prices of oil down. There's no ways that we're going to get, the solution is not Iran, the solution is not Venezuela, and the solution is not producing, obviously, or at least buying oil from Russia. Absolutely. Those are definitely a no-no. So we'll see what the deal is there. But this is the thing here. I'm going to keep an eye on US oil. We definitely need some sort of correction. Let's take a look at dollar index. From a technical perspective right here, dollar index is at the top right here. I'm looking for a sell-off on dollar index. If oil is going to continue to push until we really get the news that we're looking for, then we may see a sell-off on dollar Canadian. So I'm going to go back to the CAD right here. This is the daily right here. And so it looks like we are pushing towards this level right here. Daily is in an overbought condition. It's not showing a lot of strength right here. Let me go to the 4 hour first. 4 hours got a lot of indecision right here as it starts creating this little rising wedge. We've seen momentum pushing lower on the 4 hour. I'm seeing a negative divergence here on the 1 hour. So I think we can go ahead and look for a sell-off on US dollar. There we go. I'm going to sell US dollar CAD. All right, selling US dollar CAD. And it looks like our hedge is taking place right now with the New Zealand CAD. Notice how the Aussie CAD is rallying, and we are getting a rally also on the New Zealand CAD. So we are hedging it, so which means that we might be in multiple positions on the New Zealand CAD once the Aussie CAD goes ahead and profits. But then we're going to go ahead and profit on the New Zealand CAD when it comes back in this correction move. So it's hedging, but there's a strategy behind it. Now, let's take a look at the Swiss, the CAD Swiss right here. Let's take a look at the CAD Swiss. And going to the daily time frame, firstly, number one, CAD Swiss is range bound. Here it is here, tops and bottoms. We are expecting CAD Swiss to rally. Oil is rallying. We're seeing price of oil continue to rally. But the question here is, do we think oil is going to continue to see the rally moving north? Do we believe that? And the answer is no, we're not. But in the short term, yes. Price of oil is still not showing any sort of changes. We are seeing some sort of like indication that there's going to be, of course, some changes to the policy as to Russian oil. But at the moment right now, we're not seeing the changes. So let's go to the chart here again. And let's take a look here. So the daily is not indicating, data is indicating overbought, so we're expecting rally on the this chart. If I look at the 4 hour, we're back at support right here again, looking for rally. This is what the 4 hour consolidation looks like here. So we're coming off support right here. We're going back up to resistance. Let's go to the 1 hour. The 1 hour also came off a bit of support right here. So again, expecting a little bounce here and going north. Oscillator being overbought. In this case, sorry, oversold. So looking for a little bounce. Got a 1 hour bearish candle here that doesn't tell me much. Let me see the 15 minute. 15 minute is range bound. We're back at support right here. Let's see if we've got 15 or at least 20 pips going up back north. We do have 20 pips going north, and if the breakout's going to take place, we could get more than 20 out of that. The 15 minute is not oversold yet. The 1 hour did get into an oversold right here. And if we're looking at this, we're looking at another 77 pip rally. So I'm going to venture out to say that I am going to buy. I'm going to go ahead and buy CAD Swiss right here. All right, and you can see that we're targeting the top of the top of the range there. So we're going to buy it, look for the top of the range to be retested, and then going ahead and taking our profit at that level. All right, so we're going to hold with that. Let's see if this holds. So what we're expecting right here is a stronger Swiss, and that's actually truthful. I'm really looking to see so not stronger, the weaker Swiss. I'm really looking to see some weaker Swiss across the board. I am in on another trading account on the Euro Swiss buys, and I'm looking for that to rally too. So I'm looking for some weakness out of Swiss. I'm looking for another recovery in the euro. I'm looking for recovery in the pound. I'm looking for US dollar weakness. I'm looking for oil prices to go ahead and drop, but in the short term, maybe still a little bit of rally. So that puts all of that together, and that gives us sort of an indication that these are the things that we're looking for when making trading decisions. And also to add to that, I'm also looking at a recovery on, not recovery, I'm actually looking for a decline in New Zealand as well as Australia. Okay, so the Aussie and New Zealand pair, or at least crosses, I'm looking for a dip in those two because we're also starting to look for a retracement move. Not to say that there's a change of trend, but correction is due for the Aussie and New Zealand dollar as well. So I've done a little bit of a hedge between the New Zealand CAD and the Aussie CAD. Let's see how that plays out in today's trading. Traders, now if you want to go ahead and check out the results of this, make sure you check out the Telegram channel down below in the description. All of these trades that I've placed is inside the Telegram channel. You can follow when we add new trades, when we close trades, all of that good stuff is down below. Check it out in the description. Also, we've got our trade copy. We've got other stuff there. Sorry, not trade copy, trade replica. We've got a trade replica. Check that out as well. Check out our website. Go to TradersNetworkClub.com. Check that out as well. A lot of information, a lot of tools we use here in the trading that you might be interested in, and all that information is down below inside the description. Traders, a lot of the information shared with you today. Hopefully you guys enjoyed that, and if you did, go ahead and do us a big, huge favor and smash the like button. Smash the like button like there is no tomorrow. And I'm not talking about a war, third war or World War III. I'm talking about just smash the button, smash the like button like nobody's business. All right, go ahead and smash the like button. We'll see everyone back again tomorrow as we go ahead and dig back into the markets again and look for the trade opportunities. This is the FxBigDog signing off.